Team's not back.
Hello. Welcome in. Welcome to the house. Welcome to Layer1Live. I don't know where to start. we'll have ourselves
Pour
a
one
good
out for our homies.
Yeah, pouring out for everybody, guys. Everybody, we hope you're all right at home. You're listening to us during a pretty interesting time in our young lives and in everyone's lives. I think the toughest part about this episode is going to be staying on script, since we don't really have one for today's episode. We're going to kind of do this a little different. We've got some coronavirus news. We've got some Fed news. No breaking news as far as coronavirus. You'll have to lean on the experts there. But yeah, we're gonna have some interesting talks today about where the markets have gone in the past 7 to 14 days and where we see it going from here. Dimitri is currently on his way. You see his desk there. But yeah, Mike, what's going on, man?
He's Dima's smoking the old man. I don't even know. I'm trying to think of a word for a cheap cigarette. But I can't get it. I'm fair warning. As I told Q at the beginning of the podcast, I'm running on like 2 hours of sleep and like 30 hours here. So hey, there he is.
Hey, let's surprise him here. Hey, Demo, yeah. We're live.
Yeah, I did receive the notification.
He came sprinting in back. Well, guys, we're happy to have you, Dimitri. How you doing, man? How you been holding up this past week?
Oh man, I did my shopping just now. It was actually not that bad. So liquor stores were full, so I guess everybody's stocking up for St. Patrick's Day. I guess I don't know. So yeah, I mean,
wait,
I got my toilet paper.
So. Nice, man, nice. So you haven't heard any of the news traveling around. You think it's just business as usual? That's what's going on in your household?
I'm in my bunker here, so I don't know what's going on in the outside world. I'm off the grid.
Oh my goodness. Well, just kind of a rundown here on some topics that we can cover, so you guys know what we're gonna be talking about a little bit. Obviously, talking general coronavirus stuff. We're not experts, so not too much on that. Obviously, talking traditional markets, the Fed rate cut. Obviously, talking the crypto dump that we had, especially alongside what appears to be a BitMEX-led saving of Bitcoin, and what was like some crazy liquidation crash stuff happening. We're going to talk Tether and some interesting things happening there. And then I want to talk a little Russia oil crisis. Some UAE craziness as well that we're seeing. So we're pretty stacked here. I don't know where you guys want to start. Maybe just kind of with general questions or whatnot.
Yeah, I'll hit the updates here, at least from the stats that we have over the past week. But as far as this episode goes, guys, this is going to be like one of the most, off the cuff episodes. We need you guys to comment. If there ever was an episode you're going to comment, I want to hear your questions, want to hear your thoughts, because we're really just going to, free flow this episode and see how it goes. Because, that's basically how it goes. So top 5 countries by listens. We got US, we got Australia, Germany, UK, and Canada. We got top 3 episodes. We had the guys from Framework Ventures. We had the EOS Nation podcast that's coming in second. And we had Alex Mashinsky from Celsius. So that's looking good, guys. We appreciate you guys following along. Where do we start with this, man? Like, what's your biggest thought right at this moment as stuff is unfolding?
I think we start with probably with last week and the dump down that we've had, and kind of that craziness. So I can start there if you want.
Yeah. I mean, we talked about it a little bit last week. I think COVID was part of our title last week as well. So we definitely talked about coronavirus as it affected Bitcoin and, the dump that we had last week. But obviously we have more information now. The markets the traditional markets opened this morning and didn't do, Bitcoin any favors, crypto any favors over the last week. So yeah, let's start there. Where do you think crypto is headed here in the short term and long term, guys?
Yeah, I'll start and Deem then, correct me if I'm wrong at any point, obviously too. So, we last week saw one of the craziest days ever in crypto history from, data suggests every angle or most angles. The futures volumes were at crazy year-to-date highs. Some of the other stats that Skew basically gave as like a post-mortem that hopefully lends some thought at, not thought, but lend some kind of credibility to it being a day that I think will haunt crypto forever. Spreads between futures exchanges were greater than 10% for a significant amount of time, which basically means that if the price of Bitcoin was 5K on Bybit, it would be trading at like 5,500 on BitMEX, right? And it wasn't getting filled. And that was there. We saw that last week. We saw that Thursday night, kind of, or maybe Friday morning, as all this craziness was happening. So it was not good. Obviously, the market dumped by over 40%. Everybody, if they weren't awake, right, on Eastern time, basically woke up to some pretty crazy candles on the
I remember texting
charts.
you guys.
Yeah,
I remember.
Woke up. Yeah.
I was like,
what is going on?
Wake up, dude! The world's ending.
Yeah, and essentially the thought now, kind of after the fact, that BitMEX has talked about and some others have talked about, or at least kind of hypothesized, is one of two stories, right? So there's a BitMEX side of the story, and then there's a story from the founder of FTX and some other notable traders in the industry. But essentially, the thought is that what happened was, as BTC dropped to 5,500, there were mass liquidations, right? So if you remember, if you go back, what was it, the 11th, we were sitting at, let's see here. Yeah, so the 11th, we were bouncing around about 8K, right? So this is Wednesday night, bouncing around 8K, starting about right at the beginning of March 12th on Thursday. We dumped down to about 6K. And then from there, dropped a little bit further to 5,500, which would have been the night of Thursday. And essentially the thought is that because those drops were so fast that the liquidations of BitMEX went into what's considered like a liquidation spiral. Now, I'm not like a technical guy by any means, so I can't explain what the BitMEX CTO has tried to explain on Twitter, but essentially there's a ratio of the amount, the dollar value amount that needs to be liquidated, as well as previous liquidations that need to be settled, right? And if that ratio is greater than 1, the liquidation engine will go into a spiral where it continues to liquidate to try to find longs to settle its books. So again, two stories, right? You got BitMEX's side of the story, and then you have, some in the market side of the story. So the original piece, the first piece that came out before BitMEX said anything, was the market side of the story. And their conspiracy theory is that BitMEX saw this happening. Essentially, the price dropped from 6K to 5,500 very fast. That's when I basically, fully hedged everything. It was the craziest moment of my, 5+ years in crypto. It was literally shaking. It was nuts. And from there, it dropped a little bit later. It dropped down to, what was the bottom, like 3,600 some, Deem?
36. Yep.
Yeah, it was like 3,680 or something. And BitMEX went down. Now, it went down, and when it came back up, the price popped back up. So people got liquidated on the way down to 36. And those that were plugging in shorts, as it was dumping down to 36, got licked on the way back up. So you had this massive, wick up and wick down. And, everybody, Friday came around, to your point, everybody was like, what in the hell just happened? Right. And some of those thoughts started coming out. Now, basically the conspiracy theory is that Arthur and the BitMEX team shut down BitMEX because they saw the liquidation spiral happening. And they knew that if it went to zero, it would be the end of Bitcoin. It'd be really bad, right? I don't care what asset you trade. If it hits zero, it's GG. Even if it bounces back up to 3K or 2K, to most that's game over, right?
Link
If it
survived.
hits zero. Yeah. Well, so far.
So even though the asset was trading on BitMEX and it would hit zero on BitMEX, that doesn't. So it hits zero and that's GG for everything.
Well, yeah, because
Doesn't that seem to be just an
they have to offload those liquidations onto the spot market, so it will pack the spot market.
BitMEX acts as an index, right?
Yeah.
So, and that's a key point
Yeah.
in this kind of whole story. But BitMEX acts as an index. So
Got it.
when futures dump and spot doesn't dump, that's generally not great, right? They should move relatively in tandem, essentially. So that's kind of the conspiracy theory, is that he shut everything off, and essentially what happens is when that liquidation engine starts to just roll and roll and roll and roll, that's what these insurance funds are for, right? So BitMEX is always talking about this insurance fund. They have over 35,000 Bitcoin in it, right? Hundreds of millions of dollars, and traders kind of qualms with BitMEX is like, why are you hoarding all this Bitcoin, right? The insurance funds don't need to be this big. Well, in this case, right, when essentially the liquidation engine is moving, and again, I'm not technical, but essentially, like, theoretically, the liquidation engine is moving faster than the order book, right? The insurance fund comes in, and they pay.
They're like subsidizing it.
They're subsidizing longs, right? So anybody who's long as that liquidation engine is going down, whether you're 1x long, 5x long, 100x long, the insurance fund subsidizes that long, right? Plus, at the same time, funding rates are so skewed on BitMEX, where, generally a typical funding rate, if you're not familiar, is those who are long on BitMEX will pay 0.01% every 8 hours to those that are short, right? So if there's more people that are long than short, shorts will get paid more. Right. And just generally, there's a more complicated equation behind it, but generally, if there are more shorts than there are longs, which we've seen these last, few days here and last week, then shorts will pay longs. So you have a negative funding rate. So in tandem with the insurance fund collateralizing these longs, the funding rate is so skewed that as soon as those longs go into position, the funding rate could provide another 1 to maybe even 2.5% on the trade, right? So that's a conspiracy theory from, that side. Now, BitMEX, after the fact, came out and basically said, we believe that there was a botnet that attacked BitMEX. A bunch of fucking technical jargon that I don't understand at all from their CTO. And they said that the same thing happened on February 15th, of course, which is my birthday, where basically we were touching, this was when we were back up at 10K, and it looked like we should break through 10.5 and pretty much enter a bull market. And then on February 15th and also on February 19th, when we retested, we got 2 huge red candles, right? So it's like this weird, like, DDoS botnet kind of setup where they are able to, like, do something with APIs that overloads BitMEX and then allows it to crash. And then, the reason they would do that is obviously if they were short on other exchanges, or if they were able to utilize this exploit that exists in BitMEX, right? Because again, remember what I said, once the insurance fund comes in, which at the time was worth, $350 million or 300 million, whatever it was a lot of money. Let's say you see this happening, and somebody did this. Let's say you see this happening and you just market long 100x on BitMEX, and you catch it and the timing's right. And let's say you get 1.5% immediately from the funding rate, right? To just make sure you don't get insta liquidated. And then the insurance fund collateralizes your long. You could catch the bottom or somewhere near the bottom of whenever BitMEX shuts, everything down. And then when they return, you're going to be sitting, in this case, $17 higher, which somebody did. So somebody put up $7,700, went 100x market long, the insurance fund subsidized them. And when the exchange went back online and the price was at what, 5K, 4,500, something like that, they were 100x long from 3680. So on $7,700, they made like 700K. So it's a gamble, right? But if you understand that exploit and you can get, a quote unquote botnet set up to ruin the exchange at high times of volatility, there's potential you could really cash in. So that's kind of where that stands.
Yeah, and it bears repeating that, or at least saying that Arthur's come out on Twitter in like the last 12 hours and said that they're going to have some type of write-up on the whole situation. They've taken the community's questions and they're going to figure this out and or at least make sure that everyone else understands what actually happened. So it'll be interesting to see. Right. You have the hat on, you have the tinfoil hat. Dima, what do you think about this situation, man?
Yeah, I mean, I agree pretty much with what Mike said. I'll put out an informative graphic. If we can drop that in chat, I'll go over it. It kind of summarizes a bunch of stuff. It's a little funny, but it also has, some truth to it.
I can throw it in the chat here.
Yeah, Crypto Pickle as well as in the chat. He said universal Bitcoin income sounds pretty good right about now.
Speaking of the insurance fund, looks like MEX is above the value of Bitcoin in the insurance fund since it was on the 11th. So they're still good on the insurance fund. So that's good to see. But so this basically graphic is just explain kind of what Mike said in a little bit of a visual way. We have the BitMEX liquidation engine, we have spot engine run. And then you have the insurance fund that's supposed to pretty much cover if the liquidations go in a way where away from like the spot price and the spread is there. So then you have BTC spot dive, and then you have short covering that's supposed to keep the market kind of fluctuating above and have natural movement down, not crazy move down. Because if you have short sellers and then they start taking profits, they buy back, right? So the price should be kind of slowly bumping down, not crashing. And then when you have these vicious cycle of margin calls, what Mike was talking about when the liquidation engine went into this cycle of just liquidating positions, and that's because you have the spread between the spot price and the futures price that's like $500, and if BitMEX liquidates you based on a spot price, so that means the spot price would have to fall way more than what we were trading on BitMEX. And at the same time, you have all these liquidations that happen, and these liquidations, when they happen, long liquidations, they essentially become sell orders, right? And each liquidation that happened fueled the next liquidation that fueled the next liquidation, and it was a domino effect that continued to happen and spiral out of control.
It was like 10 mil on every 25 basis points or something.
Right, exactly. And then you have obviously the spread between the futures exchanges, which is crazy because we haven't seen that right in the past. I saw that Bybit had like 400 spread between BitMEX, and Bybit, and I was like, what? That's
it was
insane.
Largest ever.
Yeah, so like that was insane. So then traditional finance, when stuff like that happens, right, we'll have circuit breakers, right, kick in right away. They're like, okay, cool, let's halt the trading for now, let's figure out what's going on, why these liquidations are happening, chill a little bit. Obviously there's a lot of arbs that are going on, a lot of bots that are trading on traditional finance as well, so they have those tools to prevent from cascading.
They were used again this morning. Yeah,
exactly, multiple times. So and it's found to be useful because we've seen that in the past when we had one time ago, when the first time we had Black Monday, when the stock market just crashed like crazy, before we even had like computer trading, they introduced the circuit breakers then, so and it's been helpful to have them in the stock market. But in the open market for BTC, we don't have stuff like that, right? And then we have multiple exchanges, so meaning that if we have BitMEX that hits the circuit breaker, but other exchanges are trading, then it creates this interesting environment for trading that's it's not kind of like experimental, to say at least. And we know BitMEX obviously pushes the most volume, so it's kind of like the best exchange. So hitting the circuit breakers for them, I think it was a very good call to stop that happening. And then once we open back up, what Mike was explaining, basically, there was a beautiful arb opportunity that came through for those traders that were supposed to close the gap between the futures price and the spot price. And it became where it's like, hey, you need the spot price to fall like 10% to liquidate you on your 100x long, right? So it's like, it's a no-brainer, right? So it's like, okay, I'm just gonna 100x, on this position if I get
free margin.
Yeah, free margin. Yeah. So, and that was the key in bouncing us back above 5K coming back from the 3.8K, 3.6K. So the ARB traders came in, as you can see that by that graphic, that's the last one, and then the last one after that is liquidation stabilized.
Can you link that?
I sent it.
I already did.
Oh, I didn't get it through the chat.
Oh,
it's not in the YouTube chat.
That's weird. Did you ban me?
Probably. Probably.
I posted it right under Silver Crypto saying UBI.
All right.
But yeah. So that's pretty much my kind of side, which kind of aligns with Mike's side of what has happened. Also, there was huge event in derivatives, so Deribit as well. They paused trading as well, because you can imagine the leverage that's available there for options. And options, they're just a leverage product by itself. So once you have these liquidations starting to happen, it goes out of control as well, similar to the liquidation engine that we have, on BitMEX. So derivatives markets were getting crazy, and it's something that I've talked about in the past in terms of these platforms performing, during events that we have right now, which is like kind of the Black Swan event, where we have volatility that's very crazy. And is there going to be enough collateral for these derivatives platform to operate during these times? And also at the same time, is this going to amplify, a move that's, moving to the downside, amplify it even more, and hurt the Bitcoin price overall? I've talked about how derivatives are usually good for price discovery, and futures is good for price discovery. But during the Black Swan events, sometimes these things can actually fuel the fire, So Deribit did have halt trading as well. And they came back online. And in general, I saw there was close to probably like 1 billion liquidations in dollars, like billion liquidated in a single day. It's insane,
There's so many little and large things at play here, right? Like you have the coronavirus, you have the market meltdown here that we're seeing over the past week. Like there's so many different things going on that it's tough to even stay on task here. Like what are you talking? Because this is like a micro event, although that micro event, like Mike said, could have had like ripple effects that dwarf anything. I just wonder. Go ahead.
I was gonna say, and to answer your original question, I'll first pose it back to you. Where do you think we go from here then? Right, understanding that event was a Black Swan event.
Yeah.
I think the big concern, as you will see on crypto Twitter, or you'll see from other figureheads, most figureheads in the space right now, is that the store of value narrative is dead. Right. You can't have a market dump by over 40% in 2 hours and ever walk back into a boardroom, a pension fund's boardroom or a macro fund's boardroom and say, hey, I've got, remember Bitcoin? Well, it's still around after the crash. They're going to laugh at you. Right. So when you understand that, right, like what's the new narrative?
I generally feel the same way as you just said right there. It did lose its narrative. It's funny to think like what would have happened if we kept going on another 2 years, right? Like we kept building the infrastructure. We continued to like get education out there so that the world could understand and feel comfortable. It's funny in that environment what would have happened, but right now where we were, obviously it didn't work, right? Like people just, for whatever reason, they were liquidating. They were just, they were trying to get liquid, right? Like they needed their cash, they needed their money outside of Bitcoin, or it was fear, all of these things, and I think it's a timing thing. That's and I do think we still go down from here, but Chris Bernisky actually had a tweet this morning saying that he believes that crypto assets will be like some of the best performing assets when we come up on the other side of this, right? Like Bitcoin might have lost that narrative, but I still think it's interesting for individuals. I still, not today, but maybe 3 days ago, had like normies asking me, hey, Ethereum looks good here or Bitcoin looks good here. So I think we've definitely got to that point where on the other side of this, it's not like a death knell. Like it's not never coming back, but it's definitely set Bitcoin back in crypto back years. But that's what crises do, right? Like it's happening in the world right now. How many years are we set back just by the stock market being crashing the way it did? But you
said two important things there too, not to cut you off, but two super important things. The first one, right, is that people were basically sourcing cash for margin, right? So the thought is that in the same way that when a crisis like this happens, gold dumps because you have people who need cash for margin for other positions. I think we talked about this previously, but basically even though gold typically acts as a hedge in chaos conditions, it will dump it first while people source cash, source margin. So if you look at the crypto ecosystem under that context, you basically have two things that are happening. You have the large funds who have taken out Bitcoin positions, right? And it's 0.1% or 0.5% or maybe even a full 1%, right? That they've taken down on some giant portfolio because they've been sold on this, on this as a hedge. Well, that's out the window now, obviously, right? It's dumped now to 8K or 6K. So they have much bigger problems in maybe the credit space, right? Or maybe the energy space, right? Because oil got absolutely blasted. So they're going to sell their Bitcoin, which is obviously going to be massive, unprecedented daily, selling volume way above the average. So you have that piece, but then also within the crypto ecosystem, you have all the new lenders, right? So these are lenders who lend to these similar funds, big or small. Then you have, more of the retail lenders like Celsius. Then you have, some that maybe do a little bit of both. Well, when Bitcoin goes from 8 to 6, $2,000 dump, 25%, there's millions and millions of loans that now are getting margin called, right? All these various lending firms are going to go out and ask for more margin, right? Or they're basically going to, take your collateral. Now, according to an article from CoinDesk, which I think I can find in here and link, I believe it was Galaxy Digital said that they, as of Friday after the event, they had every margin call filled, meaning people added more margin. So that's good. Celsius said they processed hundreds of millions of dollars worth of liquidations. Just craziness, right? Like craziness in an instant. So that's where all this selling pressure comes from. And that's where the initial dumps come from, right? So it's not technically like a derivatives liquidation spiral, but it's something similar, just on a shorter time frame. Because if that happens, if you get margin called, so you got 12 hours or 24 hours to provide margin, if you don't, those lending firms have to offset their books. Just craziness. So that's the that's a super key piece there, and something we should definitely talk about with credit markets as they relate to crypto and also the traditional market, and some of the credit issues that the traditional market are having too.
Yeah, so we got some people in the chat now. We got Crypto Pickles, Silver Crypto's there, Ernest the Guy is there. So we appreciate you guys, and I think Ernest just wrote a comment that I'll get to in a second, Ernest. But we want to hear your thoughts, man. All the questions that we're asking ourselves, please put them in the chat or put your answer in the chat. If you got another question, please throw it in, man, because these are trying times. Let's get through it together. But Dima, the same question that Mike asked me. What do you think? Where does Bitcoin go from here?
Yeah, so I was just gonna comment on what Mike was saying about the lending and credit market. So like, for a platform like Celsius, for example, when the price started going down and the margin calls start rolling in, I don't think they really, I'm not sure how much time they offered to those people to come up with the collateral, to put it in, because the prices were moving so quickly, right? By the time you margin call somebody, the price of Bitcoin was already at 3.8K, right? Where you
Yeah.
margin calls it. Like, I understand they have collateral that's, it's pretty hefty in terms of how much margin you need to put up for a position. But still, with the speed that we were going, I don't think they left much room for a margin call warning, what they usually do, where you can come up with the collateral. Maybe like Galaxy Digital is someone who deals with more institutional traders, they know that the institutional traders are going to probably, come up with the margin, and therefore, probably that got filled. But on the other side, on the retail side, not that I'm saying Celsius does deal with institutional clients as well, but they do have quite a bit of retail clients as well. So I think that was a huge impact for it, for sure. So in regards to Bitcoin, where we go from here. So obviously, like you mentioned, so I'm guessing ETF is not going to be approved. That's going to be
Take
my
a wild
prediction.
guess.
Yeah, that's going to be my prediction. ETF, we might have to hold on to that. But to be honest, if you look at this is a Ukrainian bear speaking. If you look at big picture, right? We know BTC is known for volatility, right? We've seen volatility in BTC for a while, where it just drops like 40%. This time it was just way quicker. We go through these cycles and so on. The thing is about BTC is that it's essentially a speculation play on the world's inflation and stability in the monetary policies that are around the world. So I think that right now, people are not feeling that instability that's yet to come right now, with all the interest rates that are going down and all the stimulus that's coming, coming in from for a lot of the countries. We saw New Zealand drop, 75 basis points just recently. The central bank, we have, if we drop to zero. If we drop to zero, then the rest of the countries, especially the stressed countries, they're going to be struggling, and they're going to cut their rates too. They're going to stimulate heavily because, it's going to be way worse for them. For us in US, as far as the inflation goes, and the monetary policy impacting that is going to be minimized compared to the stressed countries that have been struggling for a while with their monetary system. And now we have this global crisis, and now they're forced to, uh, you know, basically print more money, stimulate the economy, lower the rates, create cheap credit, which is going to create something what's called the hyperinflation in those countries. That's when something like Bitcoin will become a hedge. And I think at this point, we should have enough on ramps in those distressed countries for them to start getting in. So the interesting part about this is that, we mentioned we're normies. Normal people start asking like, yo, what's up with this Bitcoin, man? How do I buy it? What is that? Or Ethereum, right? Some people are like, yeah, man, this is this is not the bottom. This is it should not, this is a bad sign for us if retail is asking about Bitcoin. But that's not true. Even though, yes, retail is usually kind of, late, or, or behind, the timing might not be right in the short term, but in the longer term, I think that still holds, because if you have normal people asking about it, then that's already, they're thinking of, okay, what's going to happen in my country with my currencies, given the fact, where we are now. And then, maybe Bitcoin is a good thing for me to hedge, even though I'm not going to pick the bottom. But overall, in the long term, once the hyperinflation, once things start hitting in those countries and things become bad and capital control is going to go into effect, that's when the Bitcoin is going to really bring in that demand that we need, that will, push it higher. But for the moment being, the speculation at the moment is that the immediate effects of it is not going to be felt. Therefore, we see Bitcoin as, at these prices. If this speculation was, if we start getting these, reports of like countries, having runs on the banks and stuff like that, then that's when you might see probably like Bitcoin, start getting more demand in. That's my opinion.
Yeah, I think I'm I'm bullish in one sense that if a lot of people that are holding right now Bitcoin, other even altcoins, right, like 50% drop, 60% drops, whatever, you're gonna start to get to a point where, and people are talking about this on Twitter, like the people that if you can survive 50-60% drops, you're not selling. You know what I'm saying? Like you're gonna get to the point where you're starting to deal with people who won't sell even if that shit hits zero. You know what I'm saying? Like you have a certain amount of holders. I'll just go back to the point before we move on here. Like it reminds me of like early message boards that I like read about with Satoshi talking to other people and be like, hey, listen, like we're not ready for this. Please do not expose this to even 100 people or 1,000 people because we're not ready for this. And I think, like we've gotten a certain point, but Bitcoin wasn't ready. I think literally, man, like, and this is just my optimism, but in 5 years, if this had not happened for another 3 to 4 or 5 years, I think we would have been ready. I think the education would have been there, the on-ramps would have been there, everything would have been in place possibly for it to not be affected as bad as it did. Like Mike said, like even in times of crisis, gold drops. It's not like completely uncorrelated. People are looking for that liquidity, but I'll see to you, Mike.
Yeah, no, I answered your question by asking you the same question. So my answer is that I think if you ignore the events of March 12th, essentially, that is unwise. I think crypto will forever be changed because of that. I think that Saturday if we had not so on Saturday looking at Bitcoin, my thought process was basically that there's a chance that by end of day Monday, this just completely falls and we're sitting at like 2K or 1,500 because the weekly candle that was closing on Sunday, it did end up closing below the 200 weekly moving average, which traditionally for Bitcoin is an incredibly important weekly moving average. That's what it's basically floating with right now. It's about the 200 weekly moving average is about 5K. So last night we closed, or is it 5,500, Dean?
5,500. Yeah.
5,500, yeah. So we're under it. We closed below it on the weekly last night. So from a technical standpoint, those trend lines have broken. Now it's recent, so Dean, correct me if I'm wrong here, but basically there's still a chance that it could kind of pop out and pop back in. But that was basically the first risk looking at Bitcoin on Saturday. The second risk was understanding basically that every country is going to go into some degree of lockdown. People are coming to the realization that a recession is basically guaranteed at this point. The question is whether or not we have another giant macroeconomic event that leads us into a depression, which would be a it would be a very long recession. We would see, crazy wipes on the stock market, right? So there was risk there on Monday that the futures markets, the pre-market trading was starting to potentially price in as they dropped they were even, and then they were down like 2.5%, and they were down 4.5%. So last night or early this morning, pre-markets dumped as low as 10%. So things did not look good, obviously, for the stock market. The Fed rate cuts that came out on Sunday and the giant QE basically made no impact, which scared everybody even more. So, now that we've made it through Sunday and are making it through Monday, I think the chances for Bitcoin to continue on are much larger, but we are far from out of the woods. With this volatility, anything can happen. I think in the same way there are giant potential credit issues in the traditional market, the crypto market is not going to be immune to that, especially as volatility remains. What we need is stabilization in both markets, right? That's what the markets are looking for. They want some sort of stabilization, some sort of hope as more and more data comes in around quarantines and hopefully coronavirus cases not continuing to double every day. So I am cautiously bullish right? I think this will set us back many years. I think we are far from the bottom. I did see that Bernisky tweet. He was saying low 3Ks as a bottom. I would be surprised if we hold that based on where the stock market is now, based on how far away I think gold is from rebounding, and based on how correlated Bitcoin has been to stocks. With that being said, Seattle, which has kind of been like the Wuhan for the U.S., is coming up on 2 weeks now, where those cases should start to dwindle, which is basically gonna be a light at the end of the tunnel for a lot of people from a data standpoint with the virus. So that's where I sit. I'm cautiously bullish. I don't think we have any chance for a bull market unless absolute chaos ensues, and the only short-term bullish case for Bitcoin, in my opinion, is that we have small to medium-sized countries who are basically going to go under, move to gold, right, and central bank digital currencies, where they basically do a hard reset and they say, hey, we fucked up, we're really sorry, here's all this stimulus, oh, by the way, over time we're going to back our brand new digital currency, which we're going to issue a bunch of to everybody, buy gold. At which point gold obviously pumps like crazy, at which point the narrative around BTC being digital gold and its monetary properties potentially reemerging, which, as we know with crypto, speculation is king. And if we see that, then, we could see something in the short term. But, many years, this will be one of, I think, the longest bear markets that we've seen for crypto.
Yeah, there's a lot to unpack there. I think the Fed did say that a lot of the QE that they're pumping in right now is going to be used for not to buy back stocks or anything like that. This is not going to the stock market. This is going to small to medium-sized businesses. This is going to people that are going to be laid off, or people that are going to, be not working for an extended period of time. I'm pretty sure I saw that. So for the people that thought that was going like into the stock market, that kind of doesn't make any sense for me. Based on what the Fed said.
I guess so. This would be what, QE5? Is it QE5, Deem, or QE4?
Yeah, I already lost count, to be honest. But I wanted to comment specifically on that. You mentioned that we cut the interest rates and to zero, and we had this full-on stimulus package that came out on Sunday, and the market basically didn't respond, it dumped. Well, it has to do with the fact that what came out after with the 8 banks agreeing, which basically they probably had a meeting with the central bank, the Fed, where they agreed they're not going to be buying back stocks for Q2. Therefore, you have that reaction in the market because usually if you get a stimulus package, then those guys just come in the market and start buying stocks, and you see green candles. That's when you see we'll dump 2,000 points, and then the next day we'll come up 1,200 points. So that vicious cycle continued to happen as they were doing the stimulus, and they realized that it's not helping because the overall selling pressure is higher than what the buybacks are coming in, and it's kind of throwing money away. It's not, serving its purpose basically to fix the market, from falling. So what they've decided is that, okay, we gave up on this, so we'll let the free market, be whatever it is right now, to correct as much as it needs to be. But for the moment being, here's what we're going to do. We're going to provide as much liquidity to our banks to make sure that our banks have the most liquidity, and take care of that reserve that they have, put it to zero. Just have the banks the strongest, because if you have market correcting and you have all these issues, you might get people that are going to start getting out cash out of banks, to just have cash on them during the times when we have, this pandemic, going on, just to have some cash. Then you have, like you mentioned, small businesses and medium-sized businesses that, need to continue to get credit lines and so on, right? They need liquidity. And that's what the banks are providing right now. And I think from the Fed perspective, I think that's the best kind of play they can do at the moment, because they literally can't really do anything else besides having the fiscal policy stimulate.
It's like trying to stop a river from flowing, man. Like they're just sitting there, like yeah.
So I think it's overall a good play by them. to have it done like that, to have banks strong, because the last thing we need, man, is just banks starting to crumble and having runs on the banks, and that's going to be the vicious cycle of BitMEX liquidation
with the US.
Yeah.
Okay, so we asked you guys, go ahead, Mike.
I was just going to say to clear up one thing there. So that the QE program is going to be $700 billion worth of asset purchases that entail treasuries and mortgage-backed securities. So again, the reason they do that, like Deem said, is so that basically the pipelines are full with cash. People can get in and out, help stabilize the market. One of the things that you start to see when everybody tries to basically move from equities to treasuries or offset bad investments, like say high yielding credit, you get massive spreads on both sides, right? Which is bad for everybody, because then they take larger losses. So QE, as you said, is not necessarily about buying stocks and propping up the price, but it is more like Deem said, of making sure that banks have everything they need to survive this push, whether that's 2 weeks, 4 weeks, 8 weeks. The longer it goes, the more support that we will see from the Fed and from the government to things like banks. But I think the reason that people get mad at the system and say that banks are evil is because banks have grown, since the 70s and 80s to be so large that they're too big to fail, right? So if the Fed did not do this and banks were, to fail, it would be very bad, right? It would be disastrous. It's what we saw happening in 2008 until they just basically came in and bailed out the banks. In my opinion, you can't have a system like this and shut it off, right? You have to survive, and then you have to let people make their choice. Hopefully they choose more wisely and they understand that, while there are great positives to capitalism, greed and overarching greed is and derivatives in a lot of cases are definite giant risks to the world economy. So, that just kind of, clearing some things up there.
Yeah, we got some comments in the chat, but before we get there, the analogy that goes along with what you're saying, it kind of reminds me of what's going on with how people are responding to coronavirus, right? Like, the idea here is that let's mitigate the amount of people that are getting infected, right? But like, along enough timeline, you're like, there's going to be a strong amount of people infected. The key is to not get everyone infected at once, or else it completely collapses.
Exactly.
And that's what you're talking about. Because if you have all the banks collapse at once, then you have a complete meltdown, as opposed to gradually moving maybe towards Bitcoin or towards more, subtle or not as risky, type of cycles like what you're talking about. But anyways, we got questions here. So we asked pretty much, where do you guys think we go from here? That was the talk we just had. Ernest says, depends. FEMA is going to be months behind on payments to states suffering from flooding disasters from over the winter. Folks are going to start missing home payments. I see deflation followed by hyperinflation. Silver Crypto said, stocking up on food and medicine, currently on the sidelines waiting for better entry, not trading currently. Crazy times out there.
Yeah, that's a good point. That was the final piece that I kind of forgot that I wanted to add on, right? So there's a very key event happening in about an hour and 10 minutes, unless Trump has moved it, but he's supposed to come back on and run a press conference where the speculation is that he will, at minimum, start to run some sort of bailout for airlines. At maximum, will be a much larger bailout, like you referenced, where basically the airline, anything related to travel and hospitality will be bailed out, because per the point from the comment is that there are a bunch of giant ripples happening. A friend of mine, works in the restaurant industry here in Pittsburgh, and most restaurants, pretty much all, local restaurants outside of maybe some chains or some that are lucky to be cash heavy, are workers are not working for at least 2 to 4 weeks now, and they have no paychecks, right? So to the point of that comment, right, what happens to mortgage payments? What happens to credit card payments when consumers are already giantly debt heavy, right? And that's where things start to get scary, because if you don't set a plan up and you don't flatten that curve on the virus, everything, this giant like $19 trillion credit bubble we have starts to really explode. So it's a viable point, and if they don't figure it out soon, the risk will continue, and markets will continue to just be completely wrecked. I mean, the Dow is down over 10% now. NASDAQ and S&P are down almost 10%. So
I want to add to what Mike was saying in regards to like these payments and interest payments and so on, right? So we already have in place. Trump announced, I think, last time that student loans interest rates, interest you don't have to pay, for now. So that's that's available at the moment. So I think that might continue into maybe credit cards and so on and other places. But yeah, and so you guys understand, just to break this down even more, the bailout that these sectors will get, like for example, airlines, travel sectors, then it's in the form of credit, right? So they're gonna get cheap credit, basically infusion of capital that they can just take onto their books, which essentially puts on their books an amount that they're gonna owe to repay back, right? After we get out of this, right? So, which in the end, if you look at it, then these assets, these companies will have to be repriced on the bonds in the bond market in regards to, because they have more liabilities now, and the ratings will change. So if the ratings for bonds for those companies change because they take on more capital, that that might not be good.
Yeah, talking to somebody at a large bank here in the U.S. who kind of works under them as a wealth manager. He said that is some of the larger risk, is that let's say corporate credit on something like a GE goes from what is it, like triple B, I think, to junk.
Yeah, exactly.
That is a massive,
That's
massive.
Insane.
It's massive because what happens is all the funds that are not your junk bond funds. Yeah, check that, Deem. See where we're sitting
checking right now.
Anything's GE was just an example, right? But there might be others that are breaking. If that moves to junk, a lot of people have to basically hand off that hot potato to those high yielding funds, many of whom have already supposedly blown up or are getting ready to blow up based on default rates. When I talked to this guy on Friday, default rates were at 1.2%, and they were estimated to reach 3.4%.
I mean,
now, to give you some context, they hit 15% in 2008. So we're still decently far, but who knows where we're sitting now?
So United is sitting at triple B right now.
Yeah. So that's the thing, right? If there's no airline bailout, or that bailout comes and it's not sufficient, and that thing's junk, it's not good.
Yeah, I mean,
not good.
Yeah, crazy times, man. I think you made a point earlier about the kind of the common person being upset with banks, and I think that's an important piece as we look to prevent defaults everywhere, right? Like when Italy default, I think that was in the chat, but like where's my 0% like interest loan? Like when can I get that? But like the common guy isn't going to see that. Hopefully you get some type of subsidy to pay for your mortgage while you're not working. But it seems like once again, it might not be as bad as 2008. But it does have that feeling of like, look, this shit is over leveraged and out of control. And one of the conspiracy theories that's in some of the chats I'm in on Telegram, now these can get pretty deep, so I don't want to go too far.
For sure.
But it sounds like a perfect excuse to have a hard reset. Coronavirus. It's not the banks. It's not the system that we've been setting up for the past years since we left the gold standard. It's coronavirus. So what an easy way to kind of like scapegoat to have is or scapebat, as they say.
And even if it's not true, it will be interesting come election time who uses that.
Yeah,
because the narratives around Trump getting bullied by China and doing a bad job on this, I mean, Biden is going to push hard on
Hoax.
all of these potential narratives, depending on, belief, right? It all depends, right? So people are going to be mad when they realize they're going to have to foot the bill. I think most people don't yet understand the repercussions. I think everybody's still kind of freaking out and wondering like, oh my God, what's going to happen? Like, hey, my kids are out of school for a month, or all these restaurants and bars are closing down and they haven't yet.
That's
Maybe today's the first day where they're going, oh shit, like
Mhm.
I'm about to carry this bill.
and that is just the start, man. Like, you're talking about your kids, working from home, or like you working and then your kids at home. Like, that's not even a problem, dude.
Right.
If this gets bad and people start dying, you know what I'm saying? Like, I'm talking about a lot of people in the United States. That's a whole nother thing. And
Oh, yeah.
I don't know if Trump ever, I don't know if he wipes that stain clean. He might get reelected, because I don't like the Democratic candidates that are there, and this isn't a political podcast. I think he gets reelected, but I don't think he can ever come back from how he handled this. I mean, he called it a hoax.
6 days ago. 6 days ago, it was a hoax.
It's a flu, man.
It's nuts, man.
It's just
It's
a flu.
nuts. But
And listen, I mean, there were like, that was varying degrees, right?
Mhm.
Like I saw it as an issue, but I didn't think we would ever get to this point a week later. Like it's just it's nuts. The escalation that has occurred in the amount of time is unprecedented.
Yes.
It's needed, which is why it's happening, but it's crazy.
So since we get into the politics, I think it's time to talk about the fiscal stimulus, because that's really the reason why everybody's tuned into our channel right now, to find out how much they're gonna get paid. So
Yeah, UBI, let's go.
Yeah, so there's a huge issue that's kind of an elephant in the room, and the central banks are afraid of it. Obviously, is that the velocity of money, so the movement of money in the economy. So when you have a situation like this where everybody's on lockdown, right? You can't go to restaurants, you can't, go and shop and whatnot, right? The movement of money slows down, right? Even though obviously you can get deliveries and stuff, right? And we see certain companies are doing really, great stuff. Like I think what was
Grubhub.
it? Grubhub, yeah, they did like zero fees for small businesses to offer deliveries, because obviously they're going to be impacted because nobody's going to go to restaurants and so on, bars, right? So the velocity of money slowing down, and people are basically holding cash, the staying liquid, and that is a huge problem. That is the biggest, like one of the biggest problems. So the way to fix this, it's been done kind of in the past by different economies, and it was kind of a mixed effect, right? I think I've talked about it on the last episode, where you basically just give everybody like $1,000, $3,000, right? And hopefully they will spend that money to kick back up the velocity of money. But the problem is that the velocity of money is slowing down due to the virus, not due to the monetary issue.
They still can't go anywhere.
Right? Yeah, exactly. So it's like, well, how do you do that? So I think this being subsidized from the fiscal side, it's going to be done more in a way of delaying maybe payments and interest rates and so on, rather than it's going to be just here's cash, right?
Right.
It's
And
like a freeze almost.
Right.
That's the fear that the traditional markets have now, right? Because traditionally, when you see that QE come in, the saying goes that when the Fed panics, the market calms. So when the Fed panics and cuts rates by 0.75%, the market tends to calm, right? Because they know that, like, okay, while this is going to be really rough times ahead and we're not out of the woods by any means, at least we know there's support there. But to Dima's point, right? Because the market has now shown twice that stimulus is not going to affect stock market prices. The only benefit to stimulus right now is that when we do bottom and when the virus does start to subside, it makes it easier to recover, right? So any stimulus, unless something happens today that bottoms us out, right? And let's say the market completely gives back all the losses, right? And we're down 1% or 2% or even, or something crazy like that, right? Which I don't think will happen, but you never know. Unless that happens, all of the stimulus from Sunday, all of the stimulus from today will only make it easier down the road when things are back to normal. The fear and the reason the stock market continues to dump is because people don't know when that will be, because we still haven't flattened the curve, because we're only 10 to 12 days on Seattle, which is our Wuhan. So the uncertainty and the fear is at an all-time high.
Yeah. I mean, there's so many things to talk about. I do think from like a historical perspective, it's one of the craziest crises we've had since I think like World War II. You know, like, and I'm not, you know, we're you know, around 30, so like I don't want to speak for the guys that have been around
Sure.
longer, but it'll be interesting to your point, like when this turns. And I've loved to have these guys on the podcast because it gives me ideas that I maybe hadn't, you know, thought through. But the idea of narratives, right? Like how they play in, especially into Bitcoin right now. We talked about Bitcoin narratives, but like when this turns and we start to come out of this, I wonder how the American propaganda machine works, man. And I don't want to get too down the rabbit hole, but like when we come out of this, we're gonna need the economy to be booming, right? Like, and
millennials are gonna have zero faith.
Yeah.
Zero faith. It's already at what, like 2%?
Yeah.
Millennials' faith in the government. Now
Yeah.
it's going to be negative.
Yeah, but
I mean,
yeah. So I mean, they're gonna need to work really hard. Listen, but it's like I made this reference the other day, but it's like 1942, right? Like when they were like the U.S. needs to come together. You know, we've had all these problems, and it's really funny how I said that too. It's really funny how all these other problems have gone away, right? Toxic masculinity and pronouns and what other problems? Gun violence.
Literally
have you heard of a gun violence? Have you heard of what other things? Harassment, race wars. Yeah. They're gone. It's it's a cure. But I do think on the other end of this, the U.S. is going to mobilize, and like I think they're going to push like we need to come together as a country, black, white, Hispanic, you know, any type of socioeconomic level. That's just optimistic, right? But because we could end up like in shambles. But I do think on the other side of this, it's going to be a freaking rocket ship. It's going to be like,
gotta stop fighting for toilet paper, to be honest.
Yeah, stop fighting for toilet paper.
Yeah.
All right.
I'm surprised you were able to get that screen like that, Deem, without any toilet paper in it based on how much you bought. Saw you at every store this morning.
I know,
no,
man.
Really.
I'm going to be selling them, so I'm going to drop a link in chat where you can order some toilet paper.
Use your ref link.
Yeah. The final point I'll say on that Q before we kind of talk more crypto, because I think we should hit some of these crypto things before we keep going. We haven't even talked about MakerDAO and that exploit.
Oh, Jesus
right?
Christ.
Hashtag
shut it
DeFi
off.
dead.
Just shut it off.
Hashtag bailout for DeFi. What I was going to say is, right, I think the crisis we're going through now has reached a level that, to your point, will be one that people look back on and write books about and, you know, run movies on and evaluate. And as scary as it is right now and as uncertain as it is, and as, you know, more bad news comes out before the good news does, I've found myself kind of like trying to take a step back and experience it a little bit and understand what it is, right? Because millennials, people our age, right, early 30s, late 20s, we've never really experienced a recession, right? 2008, we were in college or high school or whatever, right? So we didn't really feel that. We weren't really paying attention to stocks. We certainly didn't have any money in stocks in high school or college. So this is the first one, and it's going to shape everyone in a way that will, to your point, change the dynamics of the U.S. It will change the dynamics of the economy. It will change the dynamics of the way that people think about hygiene and cleanliness and government interaction and general economic health. So, you know, as best you can, just kind of understand that that is a period we're going through. And your kids or your grandkids will ask you stories about that down the road one day. And you know, make sure you have something exciting to tell them, basically.
Boom. All right, guys. Well, that's pretty much the talk that we'll have on coronavirus. I know we talked about BTC narrative. We talked about BitMEX pulling the plug. We do have to talk about DeFi. I mean, if we want to hit that, I think now's the time, man. We've had Kane from Synthetics. We had the guys from Framework Ventures on the other day. We've talked to a lot of people in the DeFi space that are super bullish on that sector in general. But it's had its issues, and there are a lot of detractors that say it's kind of fundamentally flawed, at least at this point. And that MakerDAO situation, I don't know if one of you has in-depth information. I know about it broadly from the outside, and I read an in-depth report. But what happened, and where does DeFi go from here?
Deem, do you want to hit this one, or do you want me to hit this one?
Take the MakerDAO. I'll talk about synthetics and just in general.
Okay. Yeah. So I did not see this. Well, actually, we did see this happening because it was happening live. What was that, Friday, Q?
Mm-hmm.
So essentially, I'll give a hopefully brief context on the way that the MakerDAO system works, so that you can understand how it was exploited. So MakerDAO, right, in the same way that centralized loans work, runs these decentralized loans, right? They're basically the king within DeFi, where if you put up certain collateral, I think it's like ETH and any ERC20 tokens, you're able to pull out DAI, right, which is their stable coin. Now, in order to do that, you have to over collateralize yourself, right? So just as we were talking about with Celsius, right? Celsius tries to hold over collateralization so that in massive times of volatility, they don't also get wrecked. Well, in this case, because of the volatility, there were massive amounts of loans within DeFi that started to get liquidated. $150 ETH was a massive level. That's a level that we tested earlier, I think this year or end of last. But it didn't happen quick enough, so people were able to add margin to their loans, right? In the same way that it would happen in a centralized format between, say Galaxy Digital and various funds. So all of these loans were insta liquidated. Now, when a loan is liquidated, it basically goes up for auction, right? And those that buy the debt, basically, or the collateral, essentially, they are incentivized to do so because they earn fees, right? So the system incentivizes them to purchase this collateral, and it's essentially happens on the Ethereum blockchain, right? So you submit your auction price and you purchase that collateral, and that allows, say, outstanding debts that MakerDAO has to be settled. Now, as that auction process was happening, there was so much being transferred on the ETH blockchain, and there was so much happening that it was congested. Now, the same thing happened whenever ICO started popping off, right? Same concept, right? You want to get in the ICO, you send your money to a smart contract. At some point, that smart contract, either immediately, a month down the road, 6 months down the road, will spit you out those ICO tokens. Well, if everybody is trying to contribute to those tokens in that ICO, where everybody is trying to bid on these auctions, or there's just general congestion in general, which is what we saw, none of the transactions go through. So if let's say you're somebody who maybe put $1,000 into ETH and you don't really understand how it works, and you're trying to send it from a cold wallet to an exchange, and you keep sending, but it keeps getting denied, and you don't know what gas is, you don't know what Gwei is, you don't know what any of this shit is, but you just keep pushing. So instead of sending one transaction, you're going to send 10 transactions, 20 transactions, because you see that ETH price dumping, right? So it's this exponential effect of congestion on the ETH network, and one of the reasons that people are obviously bearish on ETH. So as this was happening, essentially those people bidding on the Maker auctions were able to bid $0, but attach a massive fee associated with the bid. Because what happens is, when the ETH blockchain gets congested, a component within the blockchain called the mempool, right, which is basically where the
Q,
the unconfirmed
it's like
transactions
the
live.
line.
Yeah. Can you hear me?
Yeah.
Okay, gotcha. Yeah, it's like the queue, right? The queue gets longer and longer and longer, and ETH miners will use this opportunity to take the largest fees, right? They're incentivized to take the largest fees. So essentially what happened was, these bidders bid $0, but then attached a multi-$100, multi-$1,000 fee to the transaction. So everybody that was bidding normal rates, right, in the auction didn't get processed. But everybody that was bidding 0, who understood what was happening, got in because their fees were higher.
That's
insane. So the maker system ended up selling, let's say, 1,000 ETH collateral for $0, right? So maker currently, as of today, post-mortem, sits at over $5 million in debt.
That's a hole, right?
It's a hole. And they're basically going to issue maker tokens and ask that people purchase them so that they can settle the books and get back to even. I'm not sure when that auction's happening. I haven't been paying attention to it with everything else going on, but as far as I know, that's the current status. I don't think that's happened yet. I think we would have heard. Right. I'm not even sure if they're in like their emergency shutdown mode, but
I think they didn't they unpeg or something. I saw something about unpegging as well.
Supposedly DAI was unpegging. Yeah, I never saw it because I don't think like CoinMarketCap and Delta and Blockfolios were updating in time, but I think probably within the system, DAI was unpegging.
Yeah.
1-2 is making a good comment in the chat. I'm not going to be the EOS stan here, but he said that this would happen to EOS, people would cry wolf. So basically, I think what he's trying to say is that because this happened on Ethereum, everyone's trying to make excuses. That's at least what I'm reading. Like if this happened to any other altcoin, it would be like death to that altcoin, boom, shut it down, everything. But because Ethereum's community is so large, you have the ability to like, hey, we're figuring this out. You know, let's.
Have you seen anyone in the ETH community on Twitter? It's like barren.
Yeah.
It's like everybody's gone. I haven't seen a single person tweet that got any sort of, like virality that was like .eth. You know how people do that on Twitter with the .eth? I haven't seen one of those in days.
Yeah. People are definitely like running for the hills a little bit. I think I still see some out there, but yeah, that's a good point. When this all was happening, and I'm gonna let him remain anonymous. I'm not gonna like say any names or anything. But remember when this shit was happening, I was like sending you guys screenshots of like what was going on. That's all I'm gonna say about that. But like we saw this happening in real time, actually.
Yeah, with people
that were involved.
Some anon. It's hard to say if that's true though.
Unless, true.
People like to kind of brag, but yeah, it's crazy that it was kind of broken that way, at least to us.
Mm-hmm. You know, it's I've talked about this in the past where like why, do we have any stress testing done on these DeFi platforms? I think it's hard obviously to identify the flaws, right? But if you do stress testing and when you push your system through a theoretical scenario of black swan and things moving quickly, then I think you could have patched up certain things. And I think the stress test just happened live, and we saw the issues there. The dog makes me feel comfortable.
This is my work dog
Shep.
now.
Yeah.
Say hi to Shep, everybody. Go ahead, Dima. Sorry about that.
Yeah. So I was just gonna mention that SNX, so synthetics, right?
The question you just asked, though, didn't you pose that question to Kane? You were like, is there any testing going on? And what did he say?
So yeah, I did. Yeah. So when we had that interview, the thing is, his explanation was that it's tough to predict this because you basically you roll out the product and then you patch it up, you fix it as you go because you don't know how the market will react, and what are the exploits that will be found, when SNX works with parties like Uniswap and so on, right? So for him it was like okay, we have to kind of see what happens and then slowly adjust and make it better. I like your analogy of what you mentioned. It's like trying to fix the plane as you're flying. Yeah.
Hopefully nothing goes wrong here. Here we go.
Yeah. So I do appreciate that style, right? Because honestly, if you try to make things perfect and
it'll never be
perfect, right? Yeah, you release it in the market and then suddenly you have a bunch of holes that you don't know about, right?
Mm-hmm.
there is value to the strategy that he is using, which is absolutely right. But it's just doing stress tests is something that I think that every single platform should do. And I think, like, for example, like BitMEX, I think probably done quite a bit of stress testing on their end. Therefore, they have insurance fund. I think Arthur in general, come from the traditional finance. I think he knows, well, in terms of how to keep that platform running and solvent, right? When events like this happen. And, he's not one of those people that's like, well, Bitcoin can't go to zero. It could,
Yeah,
like,
yeah.
you know what I'm saying? So, like, so he does all that stuff. And just talking about SNX here, I'm just looking at at their token. So their token went from 83 cents to 37. So basically it got caught like more than half. Of SNX token got cut in half in terms of value. Now, if you think about it, SNX is used as the collateral. Now your collateral value just cut in half. So
Does that mean that you have to put more leverage in?
that means either you add margin or you're going to be
Yeah, more
liquidated.
margin.
But most likely, that is where the liquidation is going to take place.
Jesus.
They do have collateral as 400%, which is pretty good. But that the fact that you're exposed to their token as the market going down, your collateral value goes down. It's just it's a pretty like bad combination. When you're holding loans and your collateral goes down in value by a lot, that's when you have all of this vicious cycle of margin calls. So yeah, that's my thought about DeFi. I think overall, throughout these events that we've had, it will slowly, start, evolving. The DeFi space will start evolving and growing out of these issues. It's not to say that DeFi is dead by any means. It's just that there are certain issues that need to be worked out, so it will evolve into something stronger down the road. To be able to sustain events that are like
So has Maker done anything or said anything about how they're looking to make sure this doesn't happen again? Because it wasn't like a structural problem with Maker; it was a structural problem with Ethereum.
Right.
So they're like, okay, so it's like
technically both structural prog.
Yeah, but it had to do with the gas fees
mean.
on Ethereum. Then what's to stop this from happening tomorrow?
Right.
Well, we're never going to see such volatility now, in the crypto markets again, so obviously,
yeah.
know,
yeah. But will we reach that? Like, I'm sure it went well and above the threshold needed to actually hack or exploit the system. I'm guessing it didn't like touch the exploit and then go back down. Volatility wise,
absolutely. I think events like that, the platforms have to be prepared for events like that down the road, because they will continue to happen. Because we can't predict when the next black swan event is going to be, and the panic is going to take hold and markets will start correcting like big percentage points. So like the platform has to be built around safety switches around this. Honestly, I would love to see some more safety switches where we just pause the system. And I know a lot of people that are like for pro decentralization, they'd be like, no, hell no, like that shouldn't be done, with full decentralization. But when you have
bake that into the code,
yeah, exactly, you could. But people would be like, well, free markets, you should be able to trade at any time. But hey man, when things hit the fan, then panic takes over, emotions take over, and we as people act in that way, where we just scramble and get out of whatever we are in and not make rational decisions, and that hurts the efficiency of the market.
So I've got some updates on Maker here, and then we can move on because we don't have a ton of time here. I want to talk some of these traditional and crypto market conspiracy theories that have kept me up here for the last few days, that I think are interesting and scary and exciting all in one. So essentially, immediate changes in executive and an executive vote went into place. What's today? That went in yesterday, where the DAI stability fee would be lowered to 0.5%. The DAI savings rate spread to 0.5%. And we'll set the DAI savings rate at 0. It will also, so DAI, right? Like that's this multi-collateral DAI.
Mm-hmm.
Then on the single collateral DAI, it would lower the single collateral DAI debt ceiling to 20 million. Reduce the governance security module delay to 4 hours. So I'm not 100% familiar with Maker, but there must be a module that doesn't allow governance to happen until some certain time after, everything goes down. And then finally would activate the liquidation freeze module, which I'm guessing means that, everything's kind of on this emergency shutdown. So far the single collateral DAI debt ceiling did go into effect at 20 million. So there must have been, let's say maybe the debt ceiling was 5. And ironically enough, the government, they raised the debt ceiling. And all other changes are set to go into place in 22 minutes.
Yeah, it says Ernest is in the chat saying MakerDAO had a governance call today, so I'm sure that's what that somehow is involved with what you're talking about there.
The debt auction.
Yeah, exactly. The debt auction will occur on Thursday at 6:25 a.m. Eastern.
Got it. All right. Well, I mean, we hit MakerDAO. Guys, if you're in chat, let us know if you wanted anything else talked about. We kind of did off script today. We're talking about coronavirus, talking about the kind of crisis that's happening in the markets right now and how that affects Bitcoin and things like that. So did you guys want to touch on anything else? Mike, did you have anything else in the dashboard you wanted to hit?
Yeah, there's 3 other points here. Some things that I've been looking at with Zach Lee. So there's one that is in the traditional markets. Since we've been talking crypto, I'm gonna talk traditional markets here a little bit. Oil just broke $29, by the way, which is not good for those involved in this piece. So, as you know, the UAE and Russia, at least the two, as you know, there are many others, right? All depend on oil for GDP. Now, essentially what happened in the oil markets and the reason it dropped by 30% was because OPEC came together and said, hey, we're going to reduce supply. But as coronavirus fears intensified, I guess the theoretical thought now is that countries like Russia or the UAE that are super dependent on oil can't afford to cut supply because they need as much money as they can get, right? They need to be selling, a ton of oil, or at least producing a ton of oil. So as essentially what you have in the oil market is you have a simultaneous demand and supply shock, right? So supply is increasing because people are trying to sell oil for anything you'll give them for it. Which is already not good, even if demand stays the same, right? That's going to hurt the oil price. But because demand has literally fallen off a cliff now that no one is traveling. So airlines, wholesale, anything that a consumer is using gasoline for, right? Done for at least 2 weeks, probably more, especially in Europe, right? So you have this simultaneous demand shock and you have this simultaneous supply shock. Now, there's cracks already. There's a Forex firm in UAE that after I'm done with this, I will find here. Here it is. FinABLR. They went to 0 last week and nobody's talking about it.
What?
Yeah, they went to 0. It's at 0.11 right now. It's a Forex firm in UAE. Let me see if I can post this in the chat here.
Still up and running?
So they were
they're done.
What, CFDs for oil, or what is it?
It appears to just be a giant Forex firm that does a bunch of business in a variety of different institutional and retail. Yeah, institutional and retail markets. So I didn't look into them enough. I haven't had the time to see why this happened, but they're done. So cracks there. Then the more interesting piece here, especially globally as we look forward, is Russia, right? So I was not aware of this, but at some point at the end of last year, beginning of this year, Putin's approval rates were historically low, very bad. Everyone is not happy. They're demanding support from the government to fix things, say like infrastructure. So Putin pledged 60 billion US dollars worth from essentially what is their like sovereign oil wealth fund, and said, hey, I'm going to fix the infrastructure. I'm going to support society, basically like QE for everybody. Everything's going to be okay. Now, coronavirus hits, people start pulling out of OPEC, oil starts dumping, right? So as all this information was coming out at the beginning of March, basically Russia's stance was that their break even on oil is $42. We just broke 29. So essentially what you have happening is a pincer effect within Russia, where they have this sovereign wealth fund that's based in oil. They have, other, say, foreign currencies, right, and obviously a ton of wealth in the central banks or whatever the structure is over there. Mm-hmm. But they're also responsible for the largest lender in Russia. So they've said that they will provide like somewhere around $35 to $40 billion in US dollars in support to this lender to basically nationalize the largest Russian lender, right? So this is like a giant fear in Germany that Germany will be forced to nationalize Deutsche and a lot of these other troubled banks. And what you have there is you have short-term support from the government, but insane long-term risk, right? Because if you can't print away all of that debt, then basically the government is fully loaded with debt, and you run into, end times scenario for that country, like a Zimbabwe or Venezuela or something like this. Now, understanding those components, right? So at $42 of oil, Russia has 125 billion bucks in this oil fund, right? It's at $29 now or less. So do the math, right? Putin has pledged 60 billion to all these people, who now are basically not going to get it, is the resolution. And people are going to know they're not going to get it because first he's going to bail out the banks, right, to make sure that everything stays firm. Now, while all this is happening, basically the finance minister within Russia has said that if oil breaks 42, in order to support their oil reserves as the price continues to tank, they will sell foreign exchange currencies, gold, right, other assets that they have, in the same way that like a fund would sell gold to help out other, position margin. So as all of this is happening, they're basically what they hold, right, as a government is quickly becoming strictly denominated in rubles and in oil. Now, at the same time as this happens, people realize that it's happening. So the ruble tanks. So this pincer effect that's happening is oil is dumping because there's supply and demand shock, while at the same time the ruble is dumping, all while Russia is further denominating themselves in those two assets. So if oil continues to go lower, that wealth fund they have will continue to get wrecked, all the while the currency's getting wrecked, all the while people know that support from the government isn't coming because there's not enough money there. So play this out 2 weeks from now. Where's oil at? Some people are saying 10 to 15 bucks is the low. What happens to Russia?
They were saying that they can sustain oil being below, $40 for like 6 years or something like that.
Yeah, but were they planning on 15
what price?
bucks?
Yeah. Were they planning on 33 or 15?
Yeah, I don't know. I've seen when oil dropped, quite low, I think to these same levels before, when I was working for FX broker, and that's when I saw dollar ruble get to like 74, so 74 rubles per each dollar. Right now, we're actually at the same exact spot right now, and that was when we had that basically crisis talk about like Russia and ruble and how it's dumping and the oil is dumping, but they've survived that. So I think in general, yeah, they're gonna go through some pain, but overall, Russia is a rich, resourceful country. They will get out of this, but it's definitely not going to be good times, for them at the moment. The way things are playing out in the oil market, and also, just to mention, we have like companies like Exxon that's struggling as well, right? And then like Mike said, they're basically trying to just sell barrels of oil, so they can just cover their bottom lines and pay for things that they need to. They don't really care how much it's the barrel of oil is. They're just everybody's trying to rush to the market to dump it,
Mm-hmm.
so they can have that revenue coming in, right? And that's the vicious cycle that's dangerous.
Yeah,
for oil,
yeah,
for
yeah.
sure.
Ernest is in the chat. He said natural gas companies equal stranded assets, which I thought was a good example of what exactly you were trying to say. They have these assets that are just kind of not worthless, but essentially they're not in a good spot.
It's like everybody's crypto right now.
Fair.
Yeah.
Stranded assets. Yeah, that's a good point.
Yeah.
Okay.
Well,
So that's
yeah.
Russia. Deem, did you have another point on that?
No, that was pretty much it. I was just gonna say we're gonna have a press conference here in less than 30 minutes.
Yeah,
We'll run through these.
Yeah, we're pretty much
Sure.
done. Trump does have that press conference. I think Trudeau actually had a conference or a press conference here like 45 minutes ago. So I'm interested to see what happens there.
I know Canada closed its borders.
Okay. Yeah. Safe to say I'm not going to that wedding, Mike. But
Yeah.
anyways, I think Ernest also said in the chat, is this going to be good for VR? I think I think that would be an interesting topic to bring up. Like what companies are actually going to benefit from this? You think video games and streaming services, everything that you would do from home, maybe like the home deliveries. Yeah, those are going to increase. Baby booms might increase. We'll see. We'll see what happens there. I mean, I don't think VR is set up to in any form or fashion to benefit from this, like in any large way. I think people will use VR while they're home, but I don't think it's going to be like some movement. So right. Super interested to see like the companies that come out on the other side of this, though. Yeah.
Well, they're doing a virtual consensus this year. That's going to be interesting.
Yeah, it's so the difference between VR and virtual has to be put forth, right? Like when you're talking about VR, you're talking about headsets, right? Like you're talking about Oculus. That virtual conference will happen within a browser. It'll just be like I can access it via my desktop or via my MacBook or something like that.
Everybody's too busy watching VR porn right now anyway. Quarantined at their house. They don't have time for consensus or whatever.
Yeah. Well, I got the setup here with the bed, so we'll see.
Layer1. Joking Q. For those audio folks that aren't seeing this, it's worth a YouTube view to go and look. But we were joking Q because he's like kind of casting couching it here in his new place. So anyway,
hey, I need that side income, man.
exactly. Okay, so we got two final things here, and the first one that we're going to touch on is a classic tether crash conspiracy, and then a la Ernest's thoughts there about kind of what's going to look good on the other side of this crisis, right? I think is fitting to end with on some indicators that might be a good way to understand kind of when and why Bitcoin bottoms, especially in relation to gold and the dollar. So anyway, the tether crash. Do you want me to start with this one, Deem, or you?
Go for it. Yeah.
Okay. Yeah. So obviously, like we said earlier in the episode, right, there was a massive, basically like liquidation spiral that occurred on BitMEX last week on the night of the 12th. And as this happened, there were all sorts of different ripple effects that hit the market, right? MakerDAO exploit, which we talked about. Everything was dumping, right? So as I was kind of doing my own postmortem on this and was up early this morning, an article on Cointelegraph came out that is, exceptionally worrying for Bitfinex and for Tether. So let me post it here in the chat. Again, it's on Cointelegraph, And essentially the long and short of it is that Bitfinex, I said Bitnifex, so that's good. Bitfinex is listing what they say to be a crypto hedge fund. They say the crypto hedge fund is worth $280 million. They say it's only accessible to professional investors and aims to increase its assets under management this year. Ironically enough, it is run by the regulatory compliance company Deltec Fund and Deltec International Group, which, if you guys remember, a handful of months ago, whenever Bitfinex was first going through some of these solvency issues, whenever it dumped to like 89 cents, I think it was, their issues were that they didn't have the reserves and they didn't have banking partners. So what Bitfinex did was they went out and they partnered with this Deltec fund in the Bahamas, which is basically just a shell company, I imagine. And Deltec lended them money so that their reserves could be at basically at a percentage rate that was more comfortable for Tether to continue its peg at $1 and Bitfinex to remain solvent, is essentially the theory of what happened behind the scenes. So understanding what happened there, where basically Bitfinex was on the brink of insolvency and the Tether had lost its peg. They partnered with this fund or firm or basically shell company in the Bahamas. The fact that they are now listing it on their own exchange, saying that it's worth $280 million and that it's only available to private investors, tells me two things. One, that they're not stupid enough to offer it to retail investors, fortunately, because that would just be the end of the game. New York AG would, shut them down. It'd be GG in courts, if not, short term, definitely in the long term. So they're smart there. But the most worrisome piece is when you start to think about why they might list this fund, 4 days after a meltdown like we saw in the markets. And my initial thesis was that they would do it because their goal is to increase the amount of assets that this quote unquote crypto hedge fund has under management, which is essentially them, right? That have just basically Bitfinex is separating from a legal and financial standpoint Tether and Bitfinex, right? And that's why this whole thing exists. But the whole point is, right, that they're trying to increase the assets under management. They're trying to fund themselves by listing themselves on the exchange. Now, they did this previously with the Leo token, right? Mm-hmm. Leo token never took off. Everybody was saying it's a slam dunk, buy it at $1.
Store value, dude. I think it's still at $1.
So it has done well, ironically enough. But it goes further to tell me that if they have to announce this to more of the public, that they have not been able to secure funds, which tells me solvency is either worse than it was previously when Tether had lost its peg and was at like 89 cents or 91 cents, or obviously, more likely or equally likely, the chaos of the coronavirus, everybody's, cash off the table. Sorry, I'm not giving you any money. I got my own problems to deal with, kind of thing. So that was the first piece of it, right? So that was the first piece where the thesis was generated. And then as I started to kind of look into where opportunities might exist in the market, I noticed that on Binance, if you look at, and you guys can kind of follow along with me here if you're in front of the computer, if you look at the PAX USDT trading pair, you'll notice something very interesting that happened. On the night of the 12th,
oh wow, the
price of PAX went from $1 to $1.75. Giant wicks that don't make any sense unless you were essentially market buying Paxos with USDT. So what this told me was that somebody knew that Bitfinex got wrecked, either on the inside or they knew that Bitfinex was having problems and that this was going to be the end game. So they took their USDT on Binance and thinking that Bitcoin was going to zero and that everything was over, just market sold, somewhere around like $8 million of PAX, I think is likely what it was, which sent the price of PAX to $1.75. It obviously dropped back down. It's sitting at about $1 here. Crypto continues. The person who market bought this, let's say they got an average of $1.40. They basically got 60 cents on their dollar to avoid Tether crashing to zero, Bitcoin crashing to zero, crypto over. So where we go from here on this, I mean, obviously this is speculation, right? Like no one knows firsthand what's going on with Bitfinex. But it's three things, because the final piece that I looked at were stablecoin volumes. Paxos saw an injection of $8 million on the night of the 12th, which is where I get that $8 million number from. And between the 12th and the 13th, from the beginning of the day to the end of the day, their volumes increased by 500 million.
Oh, wow.
They're the only stablecoin to jump like that. If you look at Skew's got some great data on that. Of all the other competitors, nobody else saw that same spike and then that same drop off. So take it for what it's worth. So the theory is that Bitfinex has issues that nobody knows about with reserves.
And someone on the inside. Okay, I got it.
Someone on the inside or somebody familiar with Bitfinex and understanding maybe what problems they had before knew that. There's multiple data points that suggest that a Tether crash might be coming.
Yeah,
is basically what I'm saying. If crypto continues to get worse, if we get another 20 or 30 or 40% day of volatility where liquidations start going crazy again, I could totally see a Tether crash happening based on what we saw after the night of the 12th. Most likely we don't see that. Most likely the 12th was, the craziest amount of time because open interest was so high. Open interest is much lower now on futures products, or futures markets. But there's a chance if you're holding Tether right now, be very careful.
They just minted 50 million Tether today and sent to Bitfinex.
Yep.
It's just crazy. The Bitfinex story is just so fascinating, man. And it's like kind of like you have like three different entities already now. Like kind of we have the Tether, which is like the Federal Reserve that can print money. You have the Bitfinex, which is an exchange. It's basically like NASDAQ, and then you have now a hedge fund, it's like
right.
Three different pieces, right? And all under one, basically, management or whatnot, right? Under one group of people, which is, quite crazy. And then, with the Tether thing, it's all about the confidence game, right? If they can't deliver confidence to the market, then that's it, man. GG, And right now, the confidence in crypto, just in general, is already shook, right? So it's, it's already kind of like cracking, right? And now you have some insolvency issues with the stable token Tether. Like, really, like nobody's gonna take on more risk to hold that, especially in current market conditions.
Yeah, it seems pretty trivial to talk about anything else other than kind of the top layer of crypto right now, which is Bitcoin, and I think the stablecoin volume point is important too, Mike. So that's a good catch. Where do you first hear that?
I saw it on an article from Cointelegraph. I posted it in the chat.
Okay.
And in Telegram there. So yeah.
By the way,
crazy times.
I was gonna say, looks like I got the numbers here for the liquidations on that day. For MEX, and it was 1.1 billion and liquidations in dollars. And the funny part is that the open interest was at 841 million. Like, you know what I'm saying? Like, that's ridiculous.
So that was their insurance fund. And then what happened was whenever that price bumped back up, it liquidated so many people that the insurance fund was able to actually end up making money. So the only
absolutely.
So Arthur came out on top.
The only silver lining is that BitMEX's insurance fund didn't get wrecked because Deribit's did. Deribit only had like $6 million, and now they've got like 200K.
Yeah,
Gotcha.
for sure.
Which is another, is another exploit that is going to happen with Deribit if we get more volatility. I'm not going to say what it is, but think through it, people out there, and understand.
I went step by step.
All right, listen, guys. We're I think we're an hour and a half in. I think Trump's about to speak here in like 10 minutes, so we'll let everybody go. Speaking of things that are trivial, we actually set up a Layer 1 compound within CryptoVoxels, which is a VR like reality NFT space. So I'll link that here if you guys want to check that out. But it's gonna be a cool little thing. Who knows what we use it for? I mean, that's not the link whatsoever. Hold on.
We're gonna store all our bags there.
Yeah, that's what, you can go in there and check it out. But yeah, man,
it'll be like a. Sorry, I didn't mean to interrupt you. It'll be like a museum for like all the wrecked projects. So we'll have like CryptoKitty images in there, like DeFi is the future in there.
We'll have some pretty cool stuff. I think I got some NFT artwork set up in there. It's pretty bare bones right now, but you know, I think like Ernest here, I'm bullish on the AR space a little bit, the alternate reality. I think he was saying he was trying to correct me there. He said VR is the environment, not the device. So though you have alternate reality spaces, VR can be 2D on your laptop. It doesn't matter whether you have your headset or not. So thanks for schooling me there. 1-2's in the chat talking about EOS Go, so we'll give him a shout out. Other than that,
who do we have on the podcast? Assuming they're still in business.
So we got the block this week. So we're gonna try to fill one more, but we have Mike Dudas from the block. So hopefully we can get him on. I know Mike is looking like he just the drugs just hit him.
Dude.
He was looking off to the.
I feel sorry for those that are listening to us and not seeing the video because you gotta
I need to
watch
get some
this.
sleep.
Yeah, but anyways, guys, fun times. Thanks for coming along on the ride with us. About an hour and a half here. Appreciate you commenting in the comments. Do what you can to share Layer 1, man. We're trying to continue to build through the winter that we see here with crypto. So thanks guys. Thanks for everything. Anything else before we log off, guys?
No, I don't think so.
Tomorrow, believe it or not, is Tuesday, and I will be once again coming to you with fresh TA on BTC. So we'll see how things are going to react today.
What's that going to look like? Just basically like 200 weekly moving average, and that's the only thing. Okay, see you guys next time.
Just giant red candle, you know.
Demon needs to wear like the psycho, not the psycho, but I think
Saw?
it's like where he just has like blood everywhere on the walls. Yeah.
Oh my god.
All right.
Yeah.
Boom.
So there you go. Stay safe out there.
Stay safe.
Stay safe. Triple B's.